ready to retire? You might think it's time to start flooding your RRSP with income ETFs. What if I told you there's a better strategy and it's all about high growth dividends? Fasten your seatbelts, folks. This is going to be a good one. Typically, the focus in your portfolio shifts to a more income focused strategy once you've retired. However, with the RRSP, this is not necessarily the case. In fact, those growth-focused dividend ETFs and not the high-income ones may be the better choice in retirement. The tax structure in your RRSP, in effect, makes dividends less important than growth. And in that arena, total return is going to reign supreme for sure. The key consideration is that everything that comes into your RRSP is, it's 100% taxable when you do pull it out. So, dividends become fully taxable just as much as growth. Tax-wise, we have a very even playing field, and when that happens, it's all about the end dollar value, the total return on that RRSP. Dividend growth stocks or ETFs will simply leave more money in your account, working for you to grow, even more money. From retirement until you are forced to turn your RRSP into a RRIF and even beyond, there is a lot of opportunity to use your RRSP to maximize your total returns and, in effect, grow that nest egg. I am a huge fan of individual stocks, but for that retirement RRSP, I do think ETFs may be the better choice. It is all about diversification and, more importantly, spreading risk. With a single ETF holding a basket of many companies, it can offer you protection against a single company underperforming. In addition, the peace of mind from knowing you have professional fund managers keeping it all on track, that frees up your time from having to worry about each individual company. Retirement, really, it should be about enjoying your time, not spending it researching balance sheets. Unless you get enjoyment from researching balance sheets, in which case, heck, Yahoo Finance, you might want to bookmark it. Another good point is that dividend growth ETFs almost always come with lower fees, and that is awesome for sure. A sub to the channel is a fee-free way to enjoy future content. For today's list, I was looking for ETFs with strong dividend growth potential without a lot of the extras. For the most part, just nice and simple funds with nice and simple returns. Today's list is sorted, of course, by their 1-year total return. So without any further ado, let's do this. Coming in at number 5, we have the iShares Core MSCI Canadian Quality Dividend Index ETF with a ticker of XDIV. Now, this ETF, they invest in Canadian companies with high return on equities, stable earnings, and reliable dividends. They tend to focus on quality first. So basically, these are the companies that are built to last. Those are the type of companies I want to see in my basket for sure. At the time of recording, their price was coming in at $31.62, and they got an NAV, exact same, $31.62. Their assets under management, $2.15 billion. Their management expense ratio, this is fantastic. I love this. This may be the lowest on today's list, 0.11%. You can't beat that. Looking at their dividend, they do have a yield of 3.81%, monthly dividend of 11.5 cents per share. Let's take a look at their returns. On their 3-year return on investment, that comes in at 33.98%. Factor in those dividends, total return 49.28%. On their 1 year, that return on investment 17.81%, adding in the dividends, total return 22.69%. Their 3-year annualized 14.29%. This ETF is really a great set and forget that feels, it kind of feels tailor-made for compounding in your RRSP. Gotta love it. All right, let's move on to number 4. And we have the Vanguard FTSE Canadian High Dividend Yield Index with a ticker of VDY. VDY, of course, they focus on those high-yield blue-chip Canadian dividend stocks with a focus mostly on energy and financial. So Basically, they're investing in stocks that are known for their consistent and reliable dividend payouts. At the time of recording, their price was coming in at $51.47, and they have an NAV of $51 and, well, yeah, 47 cents. Sometimes if I script this on a weekend, we have a better chance of getting these to be the same. Their assets under management, 3.52 billion. Their management expense ratio, 0.22%. Looking at their dividend, they have a little bit higher yield, 4.419%, monthly dividend of 22.8 cents per share. On to their returns. Their 3-year return on investments coming in at 22.29%. Factor in those dividends, we get a total return of 40.73%. That 1-year return on investment, that's coming in at 18.16%. Add in their dividends, total return 23.38%. And that 3-year annualized, 12.06%. This ETF, it really gives you exposure to Canada's economic backbone. So that's not too shabby. Okay, coming in at number 3, and I don't think we've ever seen this one before on the channel. We've got the TDQ Canadian Index ETF, ticker of TQCD. This ETF holds quality Canadian dividend payers that are selected using a multi-factor screening process to create a strong focus on sustainable growing payouts. At the time of recording, their price was coming in at $21.32. NAV, exact same, $21.32. Their assets under management, 767.66 million. That management expense ratio, 0.35%. Looking at their dividends, they have a yield of 2.966%, monthly dividend of 6 cents per share. Their 3-year return on investment, pretty healthy, 47.75%. Factor in the dividends, total return 60.98%. On their 1-year, that return on investment coming in at 27.13%. Adding in the dividends, we get a total return of 30.56%. And their 3-year annualized, that's coming in at 17.20%. Kind of an interesting thing is that this is an ETF from a bank, and yet it kind of diversifies away from those often bank-heavy portfolios while still locking in some solid dividend growth. Gotta love it. All right, in our almost top spot at number 2, we have the iShares S&P TSX Canadian Dividend Aristocrats Index ETF. Yup, it's these guys again. CDZ is the ticker. They invest in those dividend aristocrats, so the companies with at least a 5-year streak of raising their dividends. Obviously, Bell has been removed from their portfolio. At the time of recording, their price was coming in at $39.96, and their NAV, $36.97. Their assets under management, $921.91 million. They're not that far from the 1 billion club. I imagine they'll get there within the next year for sure. Their management expense ratio, 0.66%. Let's take a look at their dividends. They have a yield of 3.404%, monthly dividend of 12.8 cents per share. On to their returns, that 3-year return on investment, 35.23%. Factor in the dividends, total return, 48.52%. On their 1-year, that return on investment, 28.57%. Adding in the dividends, total return, 32.96%. And their 3-year annualized, 14.09%. Oh boy, this one is definitely one of my favorites in today's list for sure. All right, let's get to our top spot. And number 1's going to Dynamic Active Canadian Dividend ETF, ticker of DXF. And I believe they're also a new one to the channel. They provide a little more hands-on than the other ETFs in today's list, but it may be worth it. It may be worth it for sure. The focus on high-quality companies with attractive earnings growth potential at compelling valuations. So they're very fundamental heavy when it comes to their selection, and I do like that. At the time of recording, their price is coming in at $50.59, and they have an NAV of $51.09. Now, their assets under management, this is a low number. This is the lowest you're going to see on the list this time around, $14.67 million. It's I almost excluded them because of how low it is, but I really like the rest of it. I really like this ETF. So I kept them. They stayed in. They're here. Their management expense ratio, it's a little higher, 0.84%. That's because they are an actively managed fund. Looking at their yield, that is coming in 1.065%, quarterly dividend of 10 cents per share. So most of this is going to be growth for this one. Looking at their returns, and we got some nice numbers in here. So their 3-year return on investment, 76.09%. Factor in the dividends, total return 82.54%. Holy banana bread. I like that. That's not bad. Not bad at all. Looking at their 1-year return on investment, that's coming in at 33.20%. Adding in the dividends, once again, total return up to 34.63%. That's high enough to be tops on today's list. Their 3-year annualized, 22.21%. This one, as I mentioned, it is smaller. They have a smaller basket, but they have the returns to back it up. And that's kind of what counts. I do overall like this list, and I'm sure there are some worthy dividend growth ETFs that I missed. Be sure, of course, as always, let me know. Let me know what you guys think. Let me know what your favorites are in the comments. If you are interested in the ETFs that we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on taking profits. Thank you for watching, and I will see you in the next video.